So you're thinking about converting a residential property and converting it into a furnished holiday let to make even more money. And that is a great idea. But what things do you need to think about when you're doing this conversion? It's a question that I posed to the Property Experts panel members, so go check out this video. Rebecca has asked a question: how does planning work, re holiday lets? I have a house that is resi and I want to convert it to holiday let and vice versa. What planning permission do I need? And I guess, Ross, let's bring you on board because you haven't spoke to the last 2 minutes because the questions have been so far and few between. But let's get you on board with it from a planning perspective, and then Simon onto you from a mortgage perspective. So Ross, over to you.
I don't know if I'm the right one to ask. This looks like a change of use to me, so it would be a standard change of use down through the planning system.
Oh dear me, the honeymoon period is over, ladies and gentlemen.
It's a bit of a grey area, this one, which is why I think it's a great question to have. Yeah. I've certainly, had resi and wanted to do serviced accommodation, but if you've got a mortgage on it, you can't. You have to change your mortgage. You have to tell your mortgage company that you're changing its use. Do you need planning permission, though? That's the question. Simon.
Fabulous question. I'm glad you asked, Bronwen. Glad you asked. Okay, so from a lender's perspective, this was a really grey area up until a few years ago, where specifically no one really knew the answer, and the lender would want you to get a change of use, and typically you need to change from C3 residential planning class to C1 guest house stroke holiday let. If you do that, you then make the property very hard to sell, you change its end resaleability, and you also make it really hard for people who have not got experience in the sector to get lending. So what has kind of happened along the way is that lenders have now got comfortable with Airbnb and Booking.com and doing short-term stays and allowing you to keep that C3 planning status. Now, we're not giving any specific planning advice here. You do need to reach out to your local authority to check what you can and you can't do in your specific area, because it is different. But in most circumstances, you should be able to retain the C3 planning class and take out a serviced accommodation type mortgage that will allow you to do a holiday let on that property without changing its planning class and retaining its current residential value, which is really quite key. It also gives you the ability, if serviced accommodation doesn't work for you, that you can revert back to its normal AST rental usage very, very easily. But you do need a specific service accommodation, so holiday let mortgage. You should not use a normal buy-to-let mortgage and do this, because lenders and underwriters are getting increasingly more sophisticated. The underwriter will Google your property, and if it pops up on Booking.com while they're trying to do a normal buy-to-let mortgage on it, it's a no, for obvious reasons.
There's a couple of things that I want to bring into about holiday lets especially, and it's not just tax, but there are obviously some tax parts to this. But business rates, council tax will say to you, well, actually, if you want to change your usage, then therefore you are running a business, it's business rates and they'll charge you more. There are other aspects to that. Local authorities may put extra requirements on you on that property as well because of that. From a tax perspective, if you earn more than £85,000 rental income from your service accommodation, it will be VATable. So earlier I said rent is VAT exempt, but it will be VATable for furnished holiday lets. The big thing I like about holiday lets, and we've talked about this on different shows on our YouTube channel, is capital allowances. So you could get 30% of your property value as a tax write-off against your self-assessment tax return or limited company account. So capital allowances is very powerful. But there are one other things I like is capital gains tax. If you had a property that's furnished holiday let for kind of 2 years, and then you sell it to buy another furnished holiday let, you don't have to pay capital gains tax on selling the first property, which you would have to do on a normal property. So furnished holiday lets have got so many tax benefits, and let's not finalize on this part, is Section 24. Because Section 24 where it means you only get a 20% tax reduction on the mortgage interest. You can offset 100% of your mortgage interest costs on furnished holiday lets. So guys, furnished holiday lets have got so many tax advantages, but they do require a lot more time and effort. And Bronwen probably, I'm obviously buoying up furnished holiday lets, continue it, but also maybe bring it back down again with some practical points.
Well, I do think it's a great strategy. It is a trading business. It's a lot of effort, but you can work with other people, so you can make it easier for yourself. But the point I wanted to make was when you started out talking about business rates and the fact that it would be rateable in that way, you can get business rate relief. So in fact, we've got a holiday let where we don't pay any business rates on it because we get that relief from the council. So always worth looking at that. I think it's small business rates relief. I think that's what it's called in our area anyway. Anyone else know about that in the team?
Well, it depends on, again, one thing I would say, Bronwen, because it is local authority, divestment of power. So I think the governments will say to local authorities, you can do whatever you like with it. And it depends if they're trying to put people off doing Airbnb, because let's not forget, London, they banned it. So, you've got to be careful. So areas like Newham won't allow you to do holiday lets beyond a certain number of days, or if at all in some of their boroughs. So you have to be very careful with getting into finished holiday lets.
Definitely happening across certain cities. So check your local authority websites and see what their particular stance is on this.
Hopefully that video was useful for you, but please do not stop there. There are plenty of videos that I know that will help you build your wealth whilst reducing your tax liability. And in this video, well, this is the one I think you should be watching right now.